Hey everybody, it's Mike. It's Sunday, and I was doing some homework, and I was gonna give out an assignment on Twitter slash X, and I thought, you know what? Why don't I just do a video? It might be a little bit easier, and maybe you guys will actually do the homework. So I'm gonna walk you through part of this homework assignment. I hope you guys get something out of it. I know I'm getting something out of it every time I do give out homework. I do it myself. So at least I think I do. Pretty sure I do. So let's see. I've never recorded anything myself. I always have other people do it for me. So if I screw up, it is what it is. So let's share market surge. Um, okay, hopefully you guys are seeing my market surge. We'll find out. And so we're trying to find days that look similar to the bad break that we had on December 18th, this day right here. That was when the Fed came out and had their press conference, all hell broke loose, and we've been in this kind of corrective phase ever since. So our goal is to try to, have some sort of roadmap or some sort of idea of what to expect. So on that day, on December 18th, or maybe it was the next day, I was working with Justin and I said, hey, let's look for days that look like this. And I've been working with him for a few decades doing similar type of things like this, where I'll say, hey, why don't we search in your spreadsheet? And he's got this giant spreadsheet with the NASDAQ going back through the history of it and set up in a way that we can really kind of dial in anything that we want to look for. And he's actually maxed out Excel. I didn't know that was possible, but he did. So I said, why don't we start with days that are in a power trend? And so a power trend is something that I came up with Justin and with Justin and Charles Harris back in 2010, 2011 or so, when we were creating the IBD market school rules. And in a nutshell, it's just a time when the market is in a more powerful phase. And you don't get those all the time, but lots of times you'll get one or two a year, or sometimes you get more, sometimes you don't get any. And it's where the 21 day, which is your green line, is trending above your 50-day, and your stock or your index is trending above it. And then it ends essentially when the green line goes back through the red line. So on SPY on last week, we had a power trend that ended. So you can see that the green line went back through the red line right there. So that power trend ended, but it's still holding on by a thread with the NASDAQ, because you can see there's still some distance there. So that'll be over once it crosses, but it's certainly under pressure at this point, and you can just tell that by the action. So again, we're just looking for. So I told them, hey, let's look for times when we're in a power trend, and you have a bad break. And I defined a bad break as falling, two or more ATRs on any given day. So an ATR is just your average true range, how much it trades within a given day. So you wanted something abnormal. So it was down twice as much as average. And on this day was actually more than three times. So it was a three ATR move. And then I said, just one other restrictive thing in there. We want to start off where it's actually up. Because this was up near new highs on December 18th. And so we were looking for times where your high was, coming into that day was above the 21 day. Again, your green line. So that gave us this list. And let me see. Hopefully this works, or I'm going to have to record this all over again, which I just frankly not going to do. So I'm hoping it works. So this is the list of dates that he generated from his spreadsheet. And I've, put them all together here, where the dark blue ones are the dates where it fell three or more ATRs, and the lightly shaded ones are two ATRs. And so on December 18th, you can see it's down here. This was your shoot. Hopefully I'm sharing these screens. Well, we'll find out when I listen back to this recording. So down here is the 18th. And that was more than three ATRs. And so you can see the last time that happened was back in September of 2020. So what you want to do is go through each one of these. This is your homework assignment. Go through each one of these days and then see which ones look like what we have now. So at this point, we've got about 3 weeks or so worth of trading since the 18th. We'll go back to the NASDAQ here. So here was the December 18th break. You've got 1 week, 2 weeks, 3 weeks worth of trading. So when we're looking at this point, because we have more evidence of how it traded after that, we'll look out 3 weeks from whatever the date is. So you can see that October 31st was our last time we had that break, and I have that with that little red arrow there. And that doesn't look anything like our current market, right? Because it went straight up into new high ground. So it had a bad break on Halloween, and then in a few days it snapped back up to new highs. So that's not a precedent that we'd be using, because this one, it had a bad break, snapped back for a few days, but couldn't get back up into new highs, and it couldn't get back above the high of the day in question, which was December 18th. So that's kind of what we're looking for, something that basically went sideways for about 3 weeks and then was at the low part of the range, because that's what's happened here. You had this little attempted double bottom that is failing, and well, it failed because you have the one bottom here. I'll refresh that and blow this up a little bit. So here was your double bottom, one bottom, two bottoms. I want to undercut that one, and we should have gone through here, and that would have been a serious buy point. At that point, you would have like slammed on the gas and hit it really hard, but that didn't happen. It was set up to do that, and then we had we had the jolts in the ISM this week, so we're switching over to the intraday chart, and you can see that we were breaking down here on that news, and then of course we had the gap down on Friday on more employment data. So with this, this is the day that we're looking for. And so we're kind of looking for something like this, where it was base building, doesn't have to be a double bottom, but it's going along sideways, tries to hold a low and then goes below it, because that's where we're at right now. So that didn't happen here. And it also didn't happen on this other date, which was July 17th, which was the next one here on our little handy spreadsheet that Justin created for us. So this one went down for a few days, bounced a little bit, and then just completely fell out. So you can just see visually, this area doesn't look anything like this. This doesn't look anything like this. So those aren't our precedents. So your homework is just to simply go through each one of these. So let's go to our next date on there. You know what? Let's go to August 26th of 22. So we're going to go up here to the change date, and we'll just go to the beginning of 23. And we can see that in August of 22, we were underneath the 200 days. So even though we were in a power trend, that doesn't look anything like the current market. So we're going to just not even look at that any further. And then we're going to go back to September of 2020, because that's our next one here, September 30. You can see by the dark blue that that was a 3 ATR move. So let's go there. 20. We'll just go to 21. Okay. So here was the September 3rd bad break that we had. And you can see it never really got any bounce from there. You had some support on the September 4th, but you didn't really get much of a bounce. So that, again, isn't really looking like our current market. You could say that it was somewhat base building there, and then it came down here, and it kind of looks like it did on September 18th or September 21st, but not exactly, because September 21st was an upside reversal. That's what we're hoping for. And then the day before that was a little bit stronger than our current market. Again, when you ever want to see, when you want to look back at our current market, what I like to do is keep in a separate window another chart with just the NASDAQ on the current date to make it easy to toggle back and forth. So I'm going to bring that over into the screen and hopefully you guys can see this. So this is our current market. And so you can see, this was the day in that we had on Friday. So it undercut our recent lows, our highs underneath the 50-day, closes underneath the 50-day, which is that red line, highs underneath the 21-day for 2 days in a row. So that's the type of setup we're going to look for. So let's go back to this, and that's not really the position. You do have a couple days where your high is underneath the 21-day, kind of closed mid-range. So it looks, when you're not really sure, you can go to the exact date. So there it is. And when you change it there, it kind of does look a little bit more like our current market. The only thing is, again, I'll bring back our current market and how that one is looking different is this one, when after your bad break, you came up and you were trying to make new high ground and you couldn't. Whereas this one back in 2020, it just never, was never able to break back above your 21-day. So that's not really a good precedent either. Here's another one of those days. This is in the June 11th of 2020, and that snapped right back. So that one doesn't look like it either. And I've marked these up the last time I did the homework. So January 27th of 2020, again, that one doesn't look like it at all either. So, and it doesn't look like it because let's just go right back there to January, end of January. So here, we'll go forward a few days. So our day in question that's jumping on me. So January 27th of 2020. So we're going to go out 3 weeks from there. So if that was January 27th, so that's right here. So we're going to go out 1, 2, 3 weeks. So we're going to go out to February 17th because that's, in time, that's where we are right now from our bad break. And does that look like our current market? Of course not. It went right back up into new high grounds. That's what we're hoping for, but that didn't happen. So again, that's not a precedent. Then you have another one marked back here, and I think you guys are getting the picture. This one went straight down afterwards. So again, not a precedent. So I had done some of this homework earlier, still have some more to do, but we're going to go to a couple that look somewhat like it. So we're going to skip again. Here's our list of everything, all of these on here. And we're going to skip all the way back to, what was the one? To this one, to January 24th of 14. So from memory, it didn't look exactly like it, but it was closer to it. So here was the January, wait, that's not what I was looking at, January 14th. January 24th. Yeah, okay. That was it. And again, this one didn't have your bounce back up above your 21-day, your green line, or anywhere near the high. So that doesn't really look like one either. There were some aspects of it that look similar in that, you ended up breaking your 50-day and you were relatively close to your 200-day. There you can see at that point, you were 7% away from your 200-day. You can see that at the bottom of the track price because it gives you how far you are from all of your moving averages. So that one didn't really look like it. And let's see, we'll go back to our list, and I think it was in 2011. Yeah, so this February 22nd of 2011, we are going to take a look at that one. So we're going to go up here and just change that to 11. And go out a little bit. about to mid-March. Okay, you can see that you had that break on January 28th, and that one doesn't look like it, but then you have this one on 2/22/11, and that does look pretty similar. So let's go to that date exactly. So the 22nd. So we were at new highs, and then we broke your 21 day in a big way, down 2.74% on the day. Let's go over to our current market. And so this is what happened there on that bad break on December 18th of 2024. You break through it and you close through your 21 days. So you can see visually this looks like it a little bit more than the other ones. Oops. All right. So here we are. That kind of looks like it. And then well, of course it looks like it because that's 20. Let me move that away. So that looks like it there. And then let's go forward just to the end of that week. See, you're snapping back and you get back above your 21 day, like what happened for us. And then we're going to go, this would be 1 week, 2 weeks, 3 weeks. So on the 15th of March of 2011, well, this is looking pretty similar, right? So here was our break. We tried to get back above the 21 day. We couldn't hold. And then this day here, March 10th, let's go back to that. That looks pretty much like our current market. Let's bring back our current market again. So here's our current market. That's a pretty similar setup. So now we have a potential precedent, and I'm going to jot this down for myself. In fact, what I'll do is I will just make it on here, and I'm just going to put this in a different color, just as a reminder to myself that that's one that we want to look at again. So the February 22nd, 2011. And now this is the fun part of it. And this is why you do it this way, where you do the change date around your day in question or on your day in question first, and then you go forward and you try to think to yourself as what would you do if you were in this market? And what would you be thinking? And you'd be thinking, hey, this might test the 200 day. That would be really bad, but at least it's probably a magnet for this last marked low over here. And you've got a lot of distance below you until you get any other support that is really around the 2600 area. And so let's just see what happens. You can kind of go out, let's just go out a few weeks. All right, that was pretty bad. You know, you came down to the 2600 level just on top of this basing area here. That's normal and natural in a corrective phase. Let's just go out. We'll go out a full month. And you can see at that point, then you recover. So this now is giving us an expectation of kind of what to potentially look for if this precedent holds. This is just one precedent that we've found. So you're looking at this point, your distance versus your 50-day is 4.7% that it got, and you can see that in the track price there, and it was still 6% above your 200-day. So let's bring back our current market and see how that would have lined up. And you can see visually, I mean, you'd have to do the math, but you would see that, okay, that would probably brings it into around this area or so. It's about splitting the distance between your 50-day and your 200-day. Obviously, this is just doing this quickly, but somewhere in there. And you can visualize that would be normal and natural and bring a lot of fear into the market. And then going back to, the 2011, then you ended up coming back and recovering. And at this point, your low is back above your 21-day and it's trending up. So we're going to go back to a couple others that I saw on this list when I was looking at it earlier, and that was this April 27th of 98. So let's go there. Man, I sure hope this video works because I'm not going to do this a second time. It is Sunday. Um, and I think Netflix is calling me. Okay, so April 27th, you get this bad break here. Now, what looks a little bit different from on this one than our current environment. Let me toggle over to our current. So our current one, when you broke down, you were pretty much at new highs coming into that day. You were just a little bit higher a couple days before that, but you were at new highs. Whereas this one was already selling off for a few days before that broke. So it's not exactly the same type of setup, but let's just go out a few weeks to see why I jotted this down earlier. Oh, okay. I jotted it down because it kind of looks similar, the aftermath of it, not really the setup to it, but you bounced, you were above your 21 day for a little bit, and then you came back down. And let's see, let's go out to the end of that week, see what happened. Okay. So now at this point on May 22nd of 1998, that's looking a little bit more like our current setup. And again, let's just toggle back over to our current setup. Your bad break, spending some time above and below your 21 day, and then you start breaking down below your lows that had been set up for that. And that's what you've got here. So this is looking pretty interesting. And now let's just go forward and at home, what you should do for your homework is just go one day, one day at a time, um, and advance through and ask yourself, like, what would you do in that environment? What would you be looking for? What would your expectations be? So on this day, your expectation, with an outside day, your high is above the high of the prior day, your low is below the low. It's a big spread closing at your lows. Your expectation is that it wants to come down to your 200 day, or at least come down to the 1708 area. And let's see what happens. You go one more day. Oh, okay. Now you've got an upside reversal. So you have something to trade against. If you were going to buy it on that day, which only the aggressive, more swing traders would do, would be to say, okay, you're going to buy on that day because you have an upside reversal. You had a shakeout below your low of your prior day, didn't come down as far as you would have expected, came down to that area. You're expecting it a little bit further, but you have this upside reversal. So now the momentum is shifting potentially. So you could buy it there and keep your stop there. And let's see what happens the next day. Okay, moved up within expectations. It's already stalling. It's not exactly what you'd like. Let's just go out a month. Okay, so here was your upside reversal. And by this point, really, you've got to throw in your towel. You'd start backing away a little bit with that mini downside reversal, but it could have come out of there. But on this day, you're saying, okay, it broke my expectations. I was expecting that to rip up back through your 21 day, and it didn't. And it had to come down one more time down here. Let's just go out a couple months. And so there was our upside reversal. It took another leg lower, and hey, look at that. It came into your 200 day. Didn't quite get under there, but close enough. So that was an interesting time. I was back in the research department at William O'Neill, trading during that time frame, and I didn't have access to live quotes or anything like that most of the day. So I'd have to put buy stops in the night before and sell stops as well. Let's see. I'm gonna cough. Well, hopefully that mute button actually worked. We'll see. Now let's see. What was another date that I had in here? Ooh, I wrote down spooky. Here are some dates. I'll just bring this over. If you can see that this was something I was doing earlier. And so I wrote, just notes to myself. This is what I like to do. So 3/30/87 was spooky. So let's look at the spooky day. So we're going to go out to 1987. And we are going to look at this. So this was your day in question. You were pretty much near your highs, the day before the bad break. So you had already sold off a little bit. So it's not exactly the same setup. But then you came back up And you know what? Let's do the change date to April 13th. All right. So you can see how this looks kind of similar to our current market where you were in a powerful move, power trend. You get your bad break, then you come up near new highs. Now, what was a little different of this one is actually was able to trade above your high of your day in question. So that's where it's not a perfect precedent. And then it came down and undercut the 50-day, like what we just had again, is why you always toggle back to our current market where we've undercut the 50-day on Friday. And so now let's see what it ends up happening. Let's just go out to the end of April. So it goes quite a bit lower. And let's go out a couple months. We'll go out to the end of June. So at that point, even lower, grinding lower. And what's really eerie and spooky is that now your high is stuck underneath your 21 day, which is not what you want to see. It should at least try to trade back through there and try to get your low back above it. Like over here, it was trying and then it fell back out. And let's just go out because we all know what happened and I'm not saying that we're like 1987 in the crash, because this one was able to recover completely and then move back up here. You had another bad break on August 18th, but then that snapped back up into new highs. So now let's go. I had another one that I had highlighted here, and that was, you know what? This is getting a little long, so I'm going to go to the June of 83, and we will see what happened there. Okay, so this is the one that's a little worrisome, right? So let's go to July 15th. Do the change date there. So you had your bad break right up there that looks similar to our current environment, and then you had a back-to-back bad break, and you did try to get back above your 21 day here. And on this day, July 15th of 83, it kind of looks like our current environment where you're now back below your 50-day. Let's go out a couple weeks, doodled around there. Now it's really starting to break, and we'll go out to September. It's getting worse. Let's just jump to the end of the year. So this is what we don't want to have happen, right? That would not make for a fun 2025. But this is kind of, your setup, and you have to be aware of anything that could happen. And the key with this is when I look at it, is just go, okay, if you wait to get heavy until your low is back above your 21 day, again, the green line here, it will save you from getting too hurt, because you got above it a little bit here in mid-July, but right away you were back below it, so you're not getting too deep in the market. Over here, this is where it was looking good. You've got to be intellectually honest, which if you're not during this process is a waste of time, because hindsight is 2020. But at this point, I'd be getting very bullish. This is July 22nd. Your low is above your 21 day for a couple days. It looks like a nice little double bottom. And let's go out just to the end of that week. Again, sorry, I had to cough. Not what you want to have happen, because that's kind of in the position that we're in right now. Let's go to the 28th. So you had your double bottom that was forming that failed, just like it failed on Friday. This is our current market, 2025, double bottom, and then it fails. And at this point, we'll just go out 1 month, see what happens. And that was your failure point, and then much lower. And let's just go out to the end of that year to get that visual again. And then we'll go out to Well, this is the Ronald Reagan days. So, you know, wow, this is the end of 1984, and not the book, but the time frame. And look, that was our break up there, and it just kept going lower and lower and lower. Um, let's wait and see when this thing turned. And you can see when it went underneath your 200 day, that was really bad. Oh, that didn't like 84. So we'll go out to December of 84, still lower. Just keep going out, go out to mid 85. Okay, then you turn here and you can see once you get really above your in January of 85, that's when you start ripping up again. And let's look at this on a weekly just to get that type of context. So your bad break was over here, and where we are right now is here. So let's hope that isn't the case. So let's try not to end on that note, but it is reality. Oh, you know what? I have one more spooky one in here, and this was in 1981. So let's go out to 1981 and see what we have there. And so the date was um, June 2nd of 1981. So we're going to go to June 2nd of 1981. That was um, your bad break there. Let's just go out a little bit. So again, that's June 2nd is this one. I don't know why I didn't have a little arrow on there. But you got, let's blow this up a little bit. So this was your day. Let me make this, put a little arrow. Okay. So that was your day in question. Then you were coming up, you got back above your 21 day. And then you were kind of doodling around here. And this kind of feels like uh, where we're at now. Let's see, track price right around June 30th. So let's go back there. And it's very important to change the date to the exact day you're looking at. So looks kind of similar to what we have now, not exactly the same. But let's just go out a few months. That got bad. So that's not what we want to see happen. So here was our break there. I don't know why that little arrow went away, but June 2nd. Well, I guess it went away because I put that back right there. So that was the day that it broke down. So you really, we get underneath the 50 day and your high gets underneath your 50 day for any period of time, that's when you run into trouble. And if you can't bounce off your 200 day, which is your black line here, and really get support, then that's when really bad things happen. So the reminder to yourself is the 200 day, that is a massive line in the sand. Let's go back just to the current day. Um, so with this in mind, if you were to get underneath this 200 day down here, then you're probably looking at a lot of pain for a long period of time. That tends to happen with the 200 day, but most of the time they look like they're going to come into the 200 day, like that one example we were looking at, and then they come out of it. So you always do this, one day at a time. I'm going to stop sharing, and I'm going to hope that recording ended up working. But again, go through the entire spreadsheet, do each one of those, do it objectively. And you're just looking for, this isn't magic. This is just, as Livermore said, history repeats itself. So what I've always liked to do is find precedents in the market. Bill O'Neill, founder of IBD, my mentor and everything, he would use precedents for stocks all the time because he had a photographic memory. And so he would remember model book stocks and say, oh, this one looks like XYZ back from 1963 or 1972 or what have you. And that's how he operated. What I like to do is, again, leaning on Justin's spreadsheet, is searching for other times in the market where it had a similar setup, and it gives you a guide of kind of what to expect. And sometimes you can't find any good ones. Like none of these are perfect, you know, which is good because none of them really look that good. But you will see if you go through all the homework assignment, you will find other ones that have recovered nicely. And, so I'm not being doom and gloom. I'm just being, the reality is, let's just go back to the market one more time. I'm going to share this. So when you've got your NASDAQ like this and your S&P, in this position, the S&P really looks like it wants to, what would be, again, you ask yourself, what's normal and natural? Normal and natural would be coming down to this level there. And, the market always kind of wants to test key areas, and that lines up with that base there, as well as this marked low. So that's where it should get support, unless there's something really materially wrong with the market. But I hope this, uh, excuse me, I hope this helped you out with the homework. I felt like some people might not get all of the, what I'm after with the homework. So I'm going to try to do this. If it goes over well, if this recording actually works, I'm going to try to do this a little bit more often with some videos, and we'll see if it's helpful to you guys. And anyways, as always, just be kind. Try to help someone else out in life, and I'll see you on IBD Live tomorrow morning, and then Tuesday, if you're not part of IBD Live, Justin and I will do a swing trader update after the close. Thursday, I think we have a special swing trader thing that we're doing. Again, that one's free. And then Friday, the SMT that I do with Ali. So those are free. So hopefully you guys tune into those and enjoy the rest of don't enjoy the rest of your day. Do your homework. If I'm going to take my time to do this, I hope you guys do your homework. And if you haven't seen the Bob Dylan movie, I can't say it enough times. It is just the best thing I've seen. Probably, I don't remember a movie that is even remotely as good as it. That I've seen in God, maybe since like Forrest Gump days. So really, really good movie. So go out. It's called A Complete Unknown. Yeah, I'm a big Dylan fan. So hope you guys dig it as much as I did, and take care. Bye-bye.